Welcome back, everyone. I am absolutely thrilled you're joining me today because, wow, we are looking at a truly fascinating case study in corporate transformation. Today's explainer is all about Avantor's Q2 2026 earnings report, and more importantly, we're unpacking their incredibly aggressive operational turnaround strategy, a strategy they are calling Revival. If you're the kind of person who loves seeing exactly how high-level strategic shifts actually trickle down into hard financial results, well, you're in the right place. We're going to map out precisely how management is fighting to restore growth and totally re-energize this entire organization.
Okay, let's dive into this. Right off the bat, we've got to talk about the sheer top-line scale of this business. In the second quarter alone, Avantor pulled in a massive $1,692 million in total revenue. Now, sure, compared to this exact time last year, that's a very slight organic drop, just 0.4%. But when you put that into the context of the broader market, plus the massive internal restructuring they're going through, holding that revenue base steady is actually a super solid baseline to build this whole turnaround on.
So here is our roadmap for today's explainer. First, we'll hit the Q2 2026 big picture. Then, we'll look at how they're executing the revival strategy. Third, VWR's return to growth. Fourth, the BMP performance and outlook. And finally, we'll wrap up with cash flow and capital allocation. Section 1, the Q2 2026 big picture. Let's get right into the financials.
A huge headline from this quarter is $152 million. That's the free cash flow Avantor generated in Q2, excluding some cash restructuring costs. I mean, that is an incredibly strong liquidity position, right? It totally proves that even while they're smack in the middle of this massive operational pivot, their hardcore cost discipline is already spinning up some really healthy cash generation. Because let's face it, cash is the absolute fuel for any turnaround. And Avantor, their tank is clearly filled.
And when you zoom out a bit, the consolidated results actually beat expectations. Alongside that stellar free cash flow, they delivered an adjusted EBITDA of $254 million, which, as we know, is a massive indicator of core profitability, plus an adjusted EPS of 21 cents. Because this revival execution is genuinely working and improving the financials, leadership actually felt confident enough to raise their full-year 2026 guidance for both organic revenue growth and adjusted EPS. That is a huge signal to the market, telling us these internal changes are locking in way faster than anyone thought.
Section 2. Executing the revival strategy. But numbers only tell half the story.
The reality on the ground is that real operations, real people, and real manufacturing processes are what actually move the needle on a balance sheet. The revival strategy is not just some empty corporate buzzword. It's a fundamental, ground-up restructuring aimed at embedding pure operational excellence. They are aggressively prioritizing lean processes, super strict safety protocols, and long-term planning across their manufacturing and supply chain. They want to drive efficiency from the warehouse floor literally all the way to the customer.
So Avantor breaks all this down into 5 core pillars. First up, evolving their go-to-market strategy to seriously enhance commercial capabilities. Second, simplifying how they work so they can execute faster. Third, strengthening talent and accountability to build a truly high-performing culture. Fourth, investing heavily in manufacturing and the supply chain. And fifth, optimizing their portfolio to zero in on high-value opportunities. This is the exact formula they are banking on to bring back growth.
And this absolutely did not happen overnight. Let's trace it back a bit. The momentum really kicked off after CEO Emmanuel Ligner joined back in August 2025, right? He went on these deep listening tours and officially launched the Revival Initiative. By Q3 of 2025, they bring in Mary Blenn as COO. Fast forward to Q4, they'd already refreshed about 25% of their senior leadership and committed to completely resegmenting the business. Then, bam, Q1 of 2026 hits, and they hit the gas, bringing on EVPs Ludovic Brelier and Jerry Pareca, which pushed their total executive leadership refresh to over 60%. That incredibly rapid talent overhaul is exactly what paved the way for Q2's spike in operational throughput.
Section 3. VWR returns to growth. Let's check out the segment performance.
Now, what's really interesting about this is that the VWR distribution and services segment returned to organic growth significantly faster than literally anyone anticipated. We are talking about a positive 1.7% organic growth rate. That translates to a staggering $1,241 million in reported revenue just for the quarter. This broad-based momentum absolutely proves that the moves they made to strengthen this specific franchise are already paying off big time.
So how exactly did they pull off this VWR turnaround? Well, it was highly methodical. Step 1, they brought the entire VWR business under one single operating roof and totally revamped the leadership structure. Step 2, they aggressively ramped up digital investments, which meant relaunching VWR.com and standing up a highly focused digital team. Step 3, they built a global commercial operations unit dedicated to pricing strategy and sales enablement. And finally, they kicked off some really deep supply chain and inventory optimizations. All of these targeted moves combined, they generated an adjusted operating margin of 10.2% for the segment. Pretty incredible stuff.
Section 4. BMP Performance and Outlook.
And this brilliantly illustrates the dynamic nature of their portfolio. Think about that massive VWR segment we just talked about. Over $1.2 billion in revenue, growing at 1.7% with a 10.2% margin. Now contrast that with the Bioscience and MedTech Products segment, or BMP. BMP's revenue actually contracted organically by 5.6%, down to $452 million. But wait, look at the adjusted operating margin on that. It's sitting at a massive 26%. So even with the contraction, BMP still threw off $118 million in operating income. It's a highly lucrative engine for them.
And it's super vital to note that this 5.6% contraction for BMP, it actually landed right near the high end of management's own expectations for the quarter. They were not caught off guard by this at all. In fact, leadership was crystal clear that as this revival strategy keeps rolling out across the company, they fully expect BMP to mirror VWR's trajectory and bounce back to organic growth in the second half of 2026.
Section 5. Cash flow and capital allocation. Let's talk about how they're spending their money. Generating cash is fantastic, right? But how a company actually deploys that capital is what determines its long-term survival. Remember that impressive $152 million in free cash flow we looked at earlier? Well, management didn't just sit on it. They immediately grabbed $112 million of that cash and used it to aggressively pay down their corporate debt. That is an incredibly disciplined choice. They are prioritizing sheer financial resilience and balance sheet health over flashy short-term moves.
So, the crucial point is that by paying down that debt so aggressively, Avantor successfully knocked their adjusted net leverage ratio down to 3.3x at the close of the quarter. If you're tracking the long-term health of a company, you know that a leaner balance sheet and lower leverage simply means less risk. It means they have the agility to keep funding all those digital tools, the supply chain upgrades, and the top-tier talent that actually power this whole revival strategy.
Which really leaves us with the ultimate question to chew on as we watch this story unfold over the rest of the year. Is VWR's faster-than-expected Q2 turnaround just a temporary bump from a shiny new management team, or is this the definitive starting line for sustainable, long-term growth across Avantor's entire portfolio? Look, the execution of their revival strategy so far is absolutely undeniable, but the second half of 2026, that is going to be the true test. Thank you so much for joining me for this explainer. Keep learning, and I'll catch you on the next one.